Hello, everyone. Good morning from this part of the world. And depending on your time zone, good afternoon and good evening to you. Welcome to today's edition of the Forex Morning Mastery. In fact, our first edition for the new week. I hope we all had a wonderful weekend and trust you're doing very well out there. And I hope you're well prepared for the new week, which it's obviously going to be also doubling as the beginning of another new month in the form of October. My own name is Sheriff Daramola, and for the next 30-40 minutes thereabout, I am going to be your host as I will be taking you on a trading journey where we shall be evaluating the financial market from both technical and fundamental perspective. And of course, during the course of the session, we are going to be dissecting the current market dynamics from the current market sentiment to the influence of the US dollar across the assets on our watch list. We're also going to be looking at the fundamental drivers, looking out for technical levels and price action setup that we are definitely going to use to navigate the current market structure today. And truly, I do have interesting and simple trading setup to look out for today. And I encourage us all to stay tuned in so that you do not miss out on these ideas we will be deliberating on today. And as always, we have three financial instruments that we are going to be monitoring for this week, which includes the USOILSPOT, the GBPUSD, and my favorite, the XAUUSD. Though I was able to share weekend videos on the GBPUSD and the XAUUSD, where I did a top-down analysis on that asset, and I left the USOILSPOT out of it due to the limited time I have. But today we are going to be looking at the USOILSPOT from the higher time frame down into the lower time frame as well. So I encourage us all to stay tuned in. I see you, Wokocha Kingdom. Good morning to you. Hello, Jonah Aruna. Good morning. Esther Dimachi. Good morning to you guys. You guys are wonderful, and I'm very glad to have you here with me this morning. And for those of you who are joining us for the first time, you're highly welcome on board. Very excited to have you around with me this morning. And I know you will be wondering what this is all about. Well, the Forex Morning Mastery is an educational avenue where we come together 3 times in a week, that is Mondays, Wednesdays, and Fridays, to do follow-up details on the assets I am monitoring week in, week out. And trust me, the more time you spend with us in this community, the better you get to comprehend my analytical approach, which you can eventually use in improving your own trading strategies. And irrespective of whatever type of trader you are, be it a scalper, day trader, or even a swing trader, you can use the information we have here. You can incorporate it into whatever strategy you have adopted. And it's also important for us to understand that this is not a signal service platform, but an educational avenue where we come together to understand how the market participants are behaving, and of course using that information to strategically position ourselves for the next move. So once again, I welcome you on board and encourage you to actively engage in the comment section. And if you do have any questions whatsoever as regards to the asset we are monitoring or as regards to the financial market, feel free to drop them in the comment section. Trust me, I'm here and willing to be of help in that regard. So with that being said, we will be diving right into the business. And as always, the first thing we normally do is to keep tabs with the fundamental factors that will be influencing the sentiment in the market today and for this week. Now, based on the asset we are looking at, that is the USOILSPOT, GBPUSD, and the XAUUSD, we will be focusing on high impactful events from both the United States and the United Kingdom economy. Now, by monitoring this event, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us that information needed to strategically position ourselves prior to this event, or even during and after this economic event. So with that said, let's look at what is going on the chart. So for today, Monday, September 30th, in terms of high impactful event, we are looking at two economic features from both the United States and the United Kingdom. Now, this morning we were able to digest the gross domestic product for quarter 2 from the United Kingdom. Now, for those of us who are not familiar with what the GDP is, well, it's a data which is usually expressed in annual growth rate, and it measures the total value of goods and services produced within a particular economy. And it's also considered to be a key economic indicator that gives us an insight into how well the economy of that country has been doing in the last quarter, that is the last 3 months. Now, talking about the UK GDP data, the previous quarter came in at an expansion of 0.6%, and market participants were looking forward to another expansion of 0.6%, but unfortunately, the actual data came in below what market had expected. Though there was an expansion in the UK, but it wasn't as high as what market had expected, as we saw the actual data come in at 0.5% expansion for the previous quarter. So though there is an expansion, which is a good news, but it's not as high as what market had expected. And of course, this morning we've seen some interesting immediate reaction to this data this morning, which we are going to be deliberating on when we go into the GBPUSD chart. Then another high impactful event that we are going to be looking forward to is the Fed Chair speech, which is coming up in about how many hours from now that is? That's about 7 to 8 hours. We are looking forward to the Fed Chairman speech. And there's another speech coming up in about 3 hours from now. That is from Bowman. Bowman, who is also a voting member of the FOMC. And whatever he says today will be, whatever he says today, including that of the Fed Chairman, will be giving market participants an insight into the bank's monetary policy stance, economic outlook, and potential future policy actions. Now, one thing I need us to understand is that the anticipation of such speeches can significantly impact market sentiment, as traders and investors will closely analyze the rhetorics for clues about future policy direction. Now, if you remember, a couple of weeks ago, the Fed Reserve actually cut interest rate by 50 basis points, which was a whooping figure. And from the look of things and from the economic data coming in from the United States in the last couple of weeks, market participants are leaning towards another 50 basis point cut in the month of November. So we are still not sure, though we are sure that there's going to be an interest rate cut, but market participants are still, there is still a dichotomy between whether it's going to be a 25 basis point cut or a 50 basis point cut. But whatever happens this week as regards to economic event will determine if there's going to be a 50 basis point or a 25 basis point cut. And of course, whatever the Fed chairman will say today will further shed more light into what the Fed officials are looking at to decide the magnitude of interest rate cuts next month. Then finally, later in the day, we are going to be looking at the Bank of England Monetary Policy Committee member, that is Megan Green, who is going to be giving a speech today too, I think in about 10 hours from now. And whatever he says also will be giving us an insight into the economic outlook and interest rate decisions in the United Kingdom. So these are the impactful events that we are going to be looking forward to today, and of course the anticipation of this event will definitely influence how the price action will move, and of course we are going to be relying on the identification of structural patterns to navigate the market dynamics today. So with that said, let's dive right into the business. I see you, Rana Anas Javed. Good morning to you. Glad to have you around. Well, I'm fine, thank you, and trust you're doing very well too. So with that said, let's dive right into the charts, and the first asset we are looking at this morning is going to be the USOILSPOT. Now on the USOILSPOT, we had some interesting situations from last week trading session. Remember, we were running a roller coaster of buys and sells through the course of last week. At the beginning of last week, it was more of buying the USOILSPOT before we saw some bearish traction push price to the downside, and we were lucky enough to be part of that move all the way into the $67 area. However, during the second half of last week, we begin to see some resurgence in buy pressure, which gave us a sign that we might be seeing a reversal setup ahead of last weekend. And with the way things are going right now, things are looking very rosy for buyers, considering the recent development in the global market in the global market. Now, before we go into the technical details to see how the market see how market participants are digesting the informations behind the scenes, let's quickly run through what the major drivers of the USOILSPOT market is going to be for this week. And of course, we also want to know the background of what has been going on prior to the beginning of this week. Now, to top the list here is the geopolitical tensions in the Middle East. Of course, this is an event that will definitely increase appeal for oil commodity, especially regarding increased concerns about potential supply disruption, which could further drive oil prices to the upside. And in recent times, we saw how Israel and Hezbollah in Lebanon have been exchanging fires in the last couple of weeks, and there is high concerns that Iran might likely come into this war. And remember, Iran is one of the major supplier of oil in the global market, which could attract some sanction and of course restrict their exportation of oil, further influencing scarcity, which could increase price to the upside. Then another factor here that could influence the sentiment in this market is the Chinese stimulus measure. Recently, China announced that they will be injecting over 1 trillion Chinese yuan into its largest state banks, and the purpose of this is to stimulate the economic activity, and this may boost the energy demand and support oil prices as well. So buyers will be banking on this latest development from China. And remember, China is the largest importer of crude oil in the world, and if the economy is doing well, it is expected that there will be increase in demand for crude oil. Then we also had an improved data this morning. During the Asian session, we saw the NBS manufacturing PMI released, though the data was below 50, but it shows that there was an improvement from the previous month, as we saw the actual data come in at 49.8 as against I think about 48 in the previous month, which is a very good development, showing that the manufacturing sector is resilient and booming at this point in time. Another good signal for buyers of the US crude oil. Now, despite the whole narrative that supports a bullish trend for the US oil, we cannot ignore the potentials of sellers too, and what they might likely bank on to push price to the downside. And one of the major highlight for sellers is the Saudi Arabia's commitment to increase oil production in December, and alongside OPEC Plus decision to raise output by 180,000 barrels per day, this could lead to a surplus in supply. And definitely when supply rises, what happens? Price will tend to drop. So with this old data we have here, how is the market digesting this information? How are they taking this information? And what are the chances that buyers and sellers have as we head into the new week? Now, for us to navigate this market, we want to first of all scale up into the higher time frame. So I will be starting my analysis from the 4 hours time frame. And of course, the structure we saw here last week still remains the same with what we are looking at today. And on the 4 hours time frame, after taking into account the character of price action since the month of June of this year, that's about July, August, September, about 3 to 4 months, it is quite clear that the prices of oil has been dropping to the downside. And from a technical perspective, this has evolved into a descending channel, as you will see here. If we connect the series of lower highs, you can see we have the resistant line of that descending channel. And when we connect the series of lower lows, we have the support line of that descending channel. And this has further emphasized that sellers has been very, very strong in this particular market. However, zooming into what happened since the beginning of this month, you will see that despite the strong bearish momentum, sellers have found it difficult to break through this demand zone between the $66.25 level and the $67 area throughout the last couple of weeks, to emphasize that market participants might see US oil spot prices cheap enough to buy from that area. And this lasted into last week's trading session, as you will see here. In as much as sellers are in play, sellers were unable to break through that $67 area, hereby making it our key level for this week. And of course, you know how we use our key level. Of course, when price remains above them, we want to continue to look out for patterns and structures that support the idea of buying. So from the second half of last week, we noticed some resurgence in buying power in this market, and we want to know if this momentum will be sustained, maybe back into this trend line, the resistant line of that descending channel, which will be dovetailing to a minimum of 300 pips to catch there. Or are we going to be seeing a scenario where price will drop back down again into either the key level, the demand zone, or any of this support line of that descending channel? Now, to help us navigate this structure, we would like to scale down into our execution time frame so that we can have an insight into how market participant has been behaving around this area since the beginning of the new week. Now, scaling down into the 1 hour time frame, we begin to see things more clearly, as on the 1 hour time frame, I was able to spot a simple trading setup here. Now, the first thing first here is the fact that price is trading above a demand zone and above our key level. Now, secondly, since last week Friday, we can see that price had been finding some higher lows around this area, suggesting that buyers are still in this particular market. Now, in the last since the market began this week, we looked at 1, 2, 3, 4, 5, 6, 7, 8, 9 hours. Price action was initially confined within the $68.60 level and the $67.85 area, emphasizing the prevailing uncertainty at that point in time. And usually whenever we have this kind of range bound structure, we want to exercise patience for market participants to make an informed decision, which will usually come in the form of either price breaking out of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. However, I had the buy position triggered initially. I moved my stop losses. I got taken out at break even. And for me, I still think that price will continue to the upside considering the breakout we saw this morning with that engulfing bullish candle that you see here. So now that we have a breakout of structure, prices come back to retest structure, I would like to place a buy stop order again above the $68.60 level in order to capitalize on the uptrend continuation. And remember, you do want to be having a wide range for your stop loss to contain any form of volatility that will happen today as regards to in anticipation of the Federal Reserve Chairman's speech coming up later today. So at this point, I want to maintain a bullish bias on this market, having my buy stop order above the $68.60 level to continue the uptrend move. However, in as much as things are looking bullish at this point in time, sentiment might lean towards bearish, considering the fact that Saudi Arabia is committed to increase oil production, and of course we talked about this earlier that OPEC Plus are also looking at increasing production by 180,000 barrels per day for the last quarter of this year. And if this becomes an issue in this market, or if market participants see substantial signals that this is likely going to happen, it could incite selling pressure in this market. Now, if that is going to be the case, what are the conditions we want to see on the chart that will make us feel comfortable joining a bearish move? Well, first of all, if we look at the structure here, remember we have a range bound structure, and whenever we have a range bound structure, the breakdown of the support line of that range will be the first signal that sellers may likely be taking over the market. So if we are going to be considering selling, though prices above the demand zone, we want to see price break down the $67.85 area, and if that is going to be the case, we will be willing to join a bearish move. But before price breaks down the $67.85 level, we never can tell. We could have some signals that will give us opportunity to join even earlier. Now, one of the things I will look out for to make me join a bearish move earlier is if we continue to see selling pressure below the $68.60 level, and if that is the case, we join a sell, then have a sell stop order below the $67.85 area. Now, there is a caveat to this bearish setup we are looking at. Now, considering the fact that price is sitting above a demand zone, remember, sitting above our key level as well, so it is a fact that we are within buyer's territory. Now, if we are going to be selling the US oil spot within buyer's territory, we need to be around to ensure that we move our stop losses accordingly to secure the position as soon as price action moves significantly in our favor. So if price moves significantly, move your stop losses, secure them, maybe at the worst case scenario break even, because price is within a demand zone. And in this case scenario, it is better, it is reasonable not to expose your positions too much. 2 positions max will be good for this kind of situation. I mean, selling the US oil spot today. So let's see how the market is going to play out in the next couple of hours. At this juncture, I still maintain a bullish bias, looking out for buying opportunities above the $68.60 level, and if price goes ahead to break out of the $69.20 level, we will be adding more buy positions to our existing trade, as price would have broken out of the highest point for this week. But if we continue to see selling pressure below the $68.60 level, then we will start considering selling the US oil spot. Trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give us update if there is any new development that comes up on this chart. So this is my simple view on the US oil spot for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 5-10 seconds off. Let's see if there are any questions whatsoever before we move on to the next asset on our watch list. And don't forget to give that video a thumbs up if you have found this content helpful and useful in making your independent trading decisions. And for those of you who are clicking on the like button, thank you very much from the bottom of my heart. So with that said, let's see if there are any questions before we move on to the next one. All right. So I do have no questions here yet. Hello, hi, good afternoon. Okay, it's afternoon there. Good afternoon. Namaste to you too. Glad to have you around with us. All right, so in the absence of no questions, I want to assume that we are all on the same page, and I do hope you've marked out the structures on your chart. Very important. The levels, we have 3 levels here that will be guiding our decisions. 2 of them will be supporting the bullish idea that is above the $68.60 level. Then we had more positions at the breakout of the $69.20 level, and we only look out for selling opportunities if selling pressure persists below the $68.60 level. So with that being said here, okay, Hi says here that I am still in sell trade in gold. Can I hold until it fill 4 hours candle week? Well, we are going to be talking about gold in a moment, so you can ask me that question when we are talking about gold. All right? Okay, thank you very much. So with that said, let's move on to the next asset on our watch list. So the next asset we are looking at this morning is the GBPUSD, the British pounds against the US dollar, and what a phenomenal last week we had on this asset, where we were able to scoop in a minimum of 160 pips, and if you had multiple entries like we did, then you would have maximized the potential of that bullish move. And in fact, one of the key features from last week was we seen price action eat a two and a half years high at the 1.34350 for the first time in 2.5 years. Price got into that level. And during the course of the weekend, I shared an update. I shared a top-down analysis on the GBPUSD. I hope you watched it. If you in any way missed out on that video, I encourage you to watch that video, as you will be having a background knowledge of how we got to the point you're seeing here on the 1 hour time frame. So I have the link right in the description box of this current video. Please go ahead and watch it. I will not be deliberating on a higher time frame due to the limited time I have here, so we will be focusing on our execution time frame. Now, moving into the structure here, for those of you who saw my video, I told you how important the 1.34350 level is. This is the highest point price action has been in the last 2.5 years, and I went ahead to show us how crucial this level is, going to as far back as 2008. Now, this level here had been either serving as a resistance line or a support line at one point in time in the last 6 years. Now, it is a crucial area, and of course, when we saw price hit this record high last week, we saw how sellers came in pushing price to the downside. Now, in addition to this observation, the question going into the new week is whether or not price is going to break out of this structure this week, or will this level continue to be a barrier for buyers, negating all their attempt to push price higher. Now, before we go into the technical details, let's look at the fundamental drivers. Let's see if it will favor an uptrend scenario that will break out of that structure, or there is a chance that sellers could come into play this week. Now, we talked about the anticipation of further interest rate cut by the Federal Reserve, which obviously has been supporting the ascent of the GBPUSD in the last couple of months. And the less dovish, the market bets that the Bank of England's rate cutting cycle will be slower than the Federal Reserve continue to support the British pound further. However, if you watch my video and looking at some of influential fund managers, I'm beginning to suspect that the idea that the Bank of England will be slower in cutting interest rates compared to the Federal Reserve may have been priced into the market. Hence, we may likely have seen the limiting point for the bullish continuation this week. And if things happen, probably depending on what the economic data for this week are saying, and market participants begin to price in an interest rate cut for the Bank of England, we may likely see a huge crash from this particular area. Now, we are not also going to ignore the cooling US inflation as well, which obviously has showed that the monetary policy has been very efficient. We saw the PCE price index from last week rising by 2.2% year over year in August, which was actually softer than what market had expected, which further supports an interest rate cut by the Federal Reserve. And if you look at the CME Fed Watch tool as at this morning, it shows a 54% chance of a half-point rate cut in November, contributing to the US dollar weakness, and which could benefit the GBPUSD. So if we look at these various fundamental factors, it appears that the path of least resistance for the pound sterling is looking very bullish. And my concern here is, will this resistance line be broken this week? Now, in as much as we're looking at a potential bullish trend for the pound sterling, the lack of top tier UK economic data for this week may likely influence the British pound negatively, as the British pound may be at the mercy of economic features from the United States this week. And this morning we saw the GDP come in lower than market had expected at 0.5%, showing though there has been an expansion, but it shows that it didn't meet what market had expected. So how is the market navigating this? How is the market digesting this information? How are market participants behaving at this point in time? So to help me navigate this structure this morning, I have a couple of structures to navigate this market. The first thing I noticed here this morning on the 1 hour time frame, that is our execution time frame, is the fact that since the midweek of last week, the price has been finding higher lows. And if we connect the series of higher lows, we have a couple of ascending trend line to work with. Now, it is a fact here that as long as price remains above our ascending trend line, we are not going to be thinking of even selling that asset. Now, with the way things are going right now, it makes a lot of sense that we continue to look out for buying opportunities, even though we are not sure if the bullish potential will break out of that 1.34350 area. Now, in addition to that ascending trend line is a structure I was able to spot after observing the character of price action since the early hours of today. So in the last 10 to 11 hours, you can see that price action has been confined within the 1.33970 and the 1.33735, emphasizing the uncertainty in the market. And you know how we do it. Whenever we identify such range bound structure, we exercise patience, waiting for price to either break down the support line to give us an opportunity to sell, or break down the resistance line to give us an opportunity to buy. So for me at this moment, I have a buy position which has already been triggered after we saw the breakout of the 1.33970, coupled with the fact that price is sitting above our ascending trend line. So I will maintain a bullish bias here, but I'm still not sure if the 1.34350 will be broken. So in that regard, we are also going to be looking out for buying opportunities only if we see a breakout retest of the structure, as the breakout of this area has a tendency of bringing in false breakouts due to the crucial nature of this level, which I did elaborate on in my video, my weekend video. So please check it out. The links are right in the description box below. So I would like to see a breakout retest of the 1.34350 to join an uptrend continuation. Now, for those of us who had missed out on this recent buy position I'm talking about, well, I will encourage you to exercise patience. Let's see if the market will come back and retest the structure. Theoretically, when price breaks out of a key structure like the 1.3397, there is a possibility of price coming back to retest the structure, which interestingly shares a confluence with that ascending trend line in an attempt to continue the uptrend move. So if you had missed out on this buy position this morning, there is no point banging your head right now. We can exercise patience. Let's see if the market will come back, retest the structure, and if it does, we want to be part of that move to the upside. So on this one, I will maintain a bullish bias here. However, the fact that we lack top tier economic event from the UK this week, making the GBPUSD, the pound sterling, at the mercy of economic event from the United States, we could see a bearish traction. And for us to start considering selling, I would rather want to see price break down this support line and that key level at the 1.337 area, where a breakdown retest of structure will be all I need to join a bearish move. Now, in as much as we're looking at selling ideas around that area, we could actually see selling opportunities even before that level happens, and we must look out for something significant. Now, what I will look out for here is price breaking down the trend line, and if there is continued selling pressure below the trend line, showing me signs that buyers are finding it difficult to maintain momentum above the resistance line of that range bound structure, then we could join a bearish move and then have a sell stop order below our key level to maximize the potential of the bearish move. So at this point in time, we have a bullish bias in play, which is currently running, and I did say that for those of us who missed out on this opportunity, let's see if the market will come back, retest it to join that uptrend move. But if the trend line gets broken, breach to the downside, a retest of structure, continuous selling pressure on, let's say, the 10-15 minutes time frame will welcome selling ideas. So it's important that we mark out the trend line and of course the range bound structure here, as we will be needing them as a reference points to guide our independent trading decisions for today. So this is my simple view on the GBPUSD for today. I hope I made myself very clear. If you have any questions as regards to what I have said, or you need some further clarifications, feel free to let me know in the comment section. So I will take the next 5-10 seconds off. Let's see if there are any questions before we move on to the final asset on our watch list for today. Stay tuned in, guys. All right. So, in the absence of no questions, I take that as a confirmation that we are all on the same page. And I do hope you marked out these levels accordingly on your chart. We will be needing them today. And of course, try to be part of my Telegram platform and TradingView platform so that you can see, you can be part of the regular updates I usually share there. So with that said, let's move right into the final asset on my watch list for this week. Stay tuned in. All right. So the final asset on our watch list for today is my favorite amongst them, and that is the XAUUSD, popularly known as the gold spot. And what a phenomenal last week we had on the gold spot, as we saw price of gold hit another record high at the $2,686 level to emphasize the potential of buyers in this particular market. However, since price action tested that all-time high, we have seen consistent and uniform lower highs, bringing price back down into that area around our key level for this week. Now, before I go any further, it's important that I also mention that I already shared a top-down analysis on the XAUUSD during the weekend, and I encourage you to watch that video so that you can have a background knowledge into how we got to the point you're seeing here on the 1 hour time frame. The links are right in the description box below. Please check them out after the live session to get yourself familiar with what we are talking about here. Now, going into the 1 hour time frame, remember as at during my video on the XAUUSD, I did acknowledge the 2,643 area as my key level for this week. And you know how we use our key level. We continue to look out for patterns and structures to buy if price remains above the structure, and we only consider selling whenever price breaks down the structure. And you will see how this key level had played a significant role in determining the direction of price action in the last 1 week. We saw the first time price broke out of that key level at the 2,643 was last week Tuesday, and ever since price broke out of that structure, this level here had continued to support buying potential from this area, as every attempt by sellers to break through has always been met with strong resistance from the buyers, as you will see what happened here last week Friday. Now the question as we head into the new week is whether or not this area will continue to be a buying niche for this new week to push price to find new highs, or how we're going to be seeing price break down this level to incite a massive sell-off. Now, before we can navigate the structure, it's important for us to keep tabs with the fundamental drivers. We want to look at the positive and negative drivers that will be influencing how the market participant will be behaving this week. Now, before I go into the drivers, I also want to make it clear that price is within uncharted territory. Price is at an all-time record high zone, and whenever price action finds itself in this kind of territory, there is always the high tendency for fear of missing out come into play. So those who had bought the gold commodity at a very cheap price and navigated it all the way into this area may at some point want to start taking some profit off the chart out of fear that price may crash from this area, since price has never been in this area before. And due to this psychological expectation, we are likely going to see retracement move, consolidation phases, and even choppy market conditions, which of course has been happening since the midweek of last week. As you will see, price has been finding lower highs and then choppy situations around this particular area. Then secondly, I also want us to take into account the fact that today is the last trading day of the month and tomorrow is the beginning of a new month. And as a result of this, we are likely going to see big players in the market like fund managers, central banks, start repositioning themselves for the new month, and as a result they may want to start taking some profit off the chart, which could push price further to the downside before they reposition themselves for new highs again next month. Now, besides these two factors, the drivers behind the scenes, like I talked about the Chinese stimulus earlier, where a bunch of stimulus measures announced by China continue to fuel investors' interest in riskier assets like safe haven assets like silver, gold, copper, and the likes. Now, the market pricing suggesting that the Federal Reserve is likely going to be lowering its borrowing cost by 50 basis points in November continue to lend support for gold prices too. Now, the geopolitical tensions cannot be taken out of the picture. The risk of escalating conflict in the Middle East, particularly involving Israel, Iran, and their allies, that is Hezbollah and the Houthis and the Hamas, continues to drive demand for safe haven assets like gold. So these factors here will continue to support the price of gold. So even if we have a drop, we could see some cushioning effect as a result of this factor. And the fact that the US dollar remains weak at this point in time will continue to provide additional support for gold prices. And one thing we also want to understand as regards to the weakness of the US dollar is the correlation with the US Treasury bond yield. And for those of you who have been with me for a while now, you know how the US Treasury bond yield is directly proportional in value to the US dollar. So if the US Treasury bond yield is not doing very well, it is expected that the US dollar too will struggle. And at this point, the US Treasury bond yield is not doing very well at this point, and this could further weaken the US dollar and support the gold commodity. Now, with all of this being said, what are the chances that buyers and sellers have? Well, if we look at these fundamental drivers, the path of least resistance remains bullish. But the concerns we have right now, the dilemma we have right now, is what path is it going to take? Is it going to retrace down a little bit before it continues the uptrend? Or will this key level we identified at the 2,643 continue to be a buying niche that will push price to find new highs today or later in the week? Now, let's take a quick look at the structure here and let's see what I was able to identify since the new week has begun. Now, the week started on a bearish note actually. Price started at around the $2,666 area, just exactly along that descending trend line I marked out earlier. Now, with this situation, we saw price drop into the 2,647.50, finding a new support line here, and this has resulted into a range-bound structure where price since the new week has begun has been confined within the 2,666 level and the $2,647.50 area to emphasize the prevailing uncertainty in the market at this point in time. So we are at a crucial, sensitive area right now as market participants are not sure where to go. Is it going to be to the upside or is it going to be to the downside? So this consolidation phase has given us a clue into what is going on now. And you know how we treat our range-bound structure in this community. As long as price remains within that range-bound structure, we do want to exercise patience and wait for price to either break out of the resistance line of the range-bound structure to give us an opportunity to buy, and interesting enough, the breakout of the resistance line will also have broken out of that descending trend line, giving us signs that the trend line may no longer have the capacity to negate the bullish attempt anymore. And if price drops below the support line of that range-bound structure, then we want to start considering selling the XAUUSD. Now, with this information in mind, it's very important that we exercise patience And one thing I'll also like to say here, that the consolidation phase we've seen during the early hours of this week might likely be attributed to major key players stepping aside from the market, waiting for the Fed chairman's speech, which is coming up later today, before making any aggressive bet at this point. So as a result of this, we may still see an extended sideways trading activity before a huge move happens today. Now, as a result of this situation here, I've been able to identify a temporary demand zone. Now, if you look at this structure closely, you will see that between the 2006-4750 and the 2006-51 had been a demand zone since the new week has begun. So for me, buying above this area is still looking reasonable at this point, while we try to capitalize on some profit within this range bound structure we've identified. So if we look at between the demand zone and the resistance line of that range bound structure, we are looking at a minimum of 160 pips. So if you are a short-term trader, you can be willing to be part of this range bound move between this demand zone and that resistance line at the 2666 level. So at this point, I will still hold on to a bullish bias here, despite the fact that we expect extended sideways trading activity. And once price moves significantly, please, it's important you move your stop losses, secure your position at break even worst case scenario, so that when price snaps back again, you will be taken out at a worst case scenario break even. And if price goes ahead to break out of the resistance line at the 2666, then price will also have breached the descending trend line, welcoming more buying opportunities. So that is how I'm going to be maintaining my bullish perspective on the XAUUSD today. Now, in as much as we talked about the potential that price may continue to the upside, we cannot ignore the potentials that sellers could also come into play, and what are the conditions that needs to be met before we jump into a bearish move. Now, like I did say earlier, for us to sell within a range bound structure, we need price to break down the support line, and by breaking down the support line of the range bound structure, it simply tells us that buyers no longer have the strength to maintain their momentum anymore. However, considering the sensitivity of this area, which is basically above our key level at the 2643, we need to be mindful before jumping into a sell position. So in this case scenario, we are not going to be having a sell stop order below the $2,647.50 level, but wait for further confirmations on our lower time frame, like the 10, 15, or even the 5 minutes time frame before jumping into a sell. Now, talking about selling this, I want to see price break down the structure first of all, and then probably retest the structure where I see continued selling pressure below this area to make me join a bearish move, where a further breakdown of the 2643 will be all we need to continue the downtrend move. But at this point in time, this is yet to be broken, so I'm not going to be considering selling along this area at this point in time. So I maintain a bullish bias, and like I did say earlier, price is still sitting within the newly identified demand zone since the new week has begun. Look at what has been going on since the new week. Look at here, it's a buying niche. Look at here, we have a sharp rejection. Look at what happened here. We had buying niche around this area, and in the last couple of hours as well, we saw buy pressure resume as soon as price got into that area. And in the last 54 minutes or so, we can still see price oscillating within that area. And if we scale down to the lower time frame, we can still see buy pressure around this area. So for me, we'll call it a temporary demand zone, and we'll only look out for buying opportunities around this area. The only condition that will make us sell is for this area to be broken to the downside, and then we look out for retest of structure, continued selling pressure on our lower time frame. Then we can join a move to the downside. So this is my simple move on this one. And for the go-go challengers, we shall be scalping this market today. I will be with you in the next 30 minutes after taking my breakfast, and let's see how we can scalp this market. In fact, for scalpers, I'm looking at this range bound, this 160 pips, 160, 170 pips for the bullish potential here. So go-go challengers, you will be seeing as we will be running this accordingly. So this is my simple view on the XAUUSD today. I encourage us all to mark out these levels accordingly on our chart, as we are going to be needing them as a reference point to guide our independent trading decisions today. And hi, are you still around with you? Are you still around? I hope I made myself clear there. If you have any questions, feel free to let me know. So I will take the next 10-15 seconds off. Let's see if there are any questions before we start rounding off on today's Forex Morning Mastery. See you in about 10 seconds. All right. So in the absence of no questions, I hope we are all on the same page here, and I hope you've marked out these levels accordingly. So let's see how the market is going to play out as market participants anticipate the Fed chairman's speech coming up later today. Thank you very much for your support, you guys. You guys are wonderful. We had a tremendous number of likes this morning, tally with the number of people on board, and thank you very much as you continue to support the growth of this platform. So today we were able to take on all of the financial instruments on our watch list for this week, which includes the USOILSPOT. We talked about the GBPUSD, and of course my favorite, the XAUUSD, where we were able to identify simple trading setups that we are going to be using to navigate this market today. And for those of you who are joining in late that probably have missed out on what we talked about earlier, don't worry, this video is still available. You can watch the replay at any time today. You are very much welcome. Hi, I'm glad to have you, and I'm looking forward to seeing more of you as we okay, I think that was a compliment. Okay, so it has been a wonderful moment with you guys today. I really appreciate your presence, and let's be hopeful that this week is going to be another profitable one for us all. And for those of you who are joining us for the first time, I do hope you are able to gain one or two things from what we discussed here today. If you have done so, you want to be part of our subsequent editions, as the more time you spend with us, the more you get to comprehend my analytical approach, which eventually will help in improving your own trading decisions. So I look forward to seeing more of you on Wednesday, same time, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to review how well these assets have been doing, and of course prepare for the second half of the week, which promises to be another exciting one, as we do expect some high level of volatility as well. Remember, the second half of the week involves the ADP employment change, the NFP, and of course we have some other couple of high impactful events from the United States economic docket. So on this note, I would like to wish us all the best of luck. If you have any questions whatsoever, you can always send me a mail. My email address are right in the description box of the current video. You are very much welcome, Napari. I'm very glad you found it helpful. Hi, ask me that, do you have any course Well, I don't have any course, but one thing I would just like to let you know is that whatever course I'm going to be selling or giving to you is what you can see on the internet. Now, my analysis, let me just put it this way so you can have an idea of what to look out for. My analysis comprises price action and fundamentals. So my price action is used for me to understand how the market participants are behaving. Is the sentiment bullish? Is the sentiment bearish? Well, my structures will tell me that, and then use the fundamental factors to complement this analysis, and then use that to strategically position myself for the next move. So that is basically what my analytical approach is all about. So in terms of price action, you can look out for technical analysis online, chart patterns, try to understand them and the basis, the psychology behind them, why they behave the way they behave, and then you're good to go. It's a very simple approach. All right, so you can look online for any of these things and you will definitely find them. So I hope I made myself clear there. Hi. So it's on this note I would like to wish us all the best of luck today. Go challenges. I will be with you in the next 30 minutes, so stay tuned in for me. So on this note, I want to wish us all the best of luck. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.